How you guys doing? It's Gersher from Technical Options Trader. Hope you guys had a great long weekend if you're in Canada. That's why there's no video yesterday, but let's get started and see what the market's been doing, right? So if we look at the market overall right now, starting with the S&P 500, it's very choppy, right? So what I've started to notice in the S&P 500, where if you guys watched my last few videos, I talked about this, that there should be a rally coming. This is too much of a move to the downside. And what I'm starting to observe here is some interesting patterns starting to emerge here, where in this range, we're starting to see wicks being formed on the bottom. Okay, so every time it tries to touch this level, which is the 385, we're seeing buyers stepping in this area and pushing it back up, right? So it's not closing below the 380s on the daily, and it's going back above this level, which is at 390 almost, or 389, right? So a lot of buyers are stepping in, and tomorrow we have something really big happening, which is the FMOC minutes that are coming out tomorrow. There's some more economic events happening later on this week, but that's the primary one I'm keeping my eye on, right? So looking at SPY, I'm starting to observe over the last few days there's more buying as well. However, but the buying pressure is not that high. It's low, it's declining. So that's why I'm not trading a lot right now, because what I'm starting to see is the market's indecision, but there are buyers that are definitely stepping in. They're trying to hold this level. What's left to see is what the minutes will bring tomorrow. Will the Fed be more hawkish, or will they just step back a little bit and give a little bit more of a bullish sentiment when it comes to rate hikes and those different events? But right now, what's starting to happen in the S&P 500 has definitely got my eyes open. The possibility that we can start to see a reversal sooner than later. And as I've been mentioning in my other videos, if we look at the hourly chart on the S&P 500, you guys can see that when SPY rejected this level right here, which is the 430, after that it triggered a huge sell-off. Okay, this sell-off has been active for quite some time now, and like I said before, I like to see pullbacks starting to happen, and as you guys can see, it's trying to get back to this trend line and trying to break out. So I want to see a nice push above with more buying pressure. If there's a move to the upside and there's not enough buying pressure to make sense of that move, or the buying pressure is declining, remember, that's just going to fail even harder. So that's something I'm watching for right now on the S&P 500. The levels, the important level that I'm watching is 420. But for now, if you want a quick scalp to the upside, I'm looking for a break of 398 to push to 405 and then 410, right? But right now, SPY is bearish, so we'll keep an eye on that and see what happens with that. All right, looking at triple Q, guys. So triple Q, if you look at this market, right, triple Q is down about, I believe, close to about 30%. That's where triple Qs are for the year. Actually, no, it's up here right now. So about 29%. This is how much they were down. Oh, they're just down just as much, almost at 31% with the 2020 crash. Okay, so the Qs overall are, I think they're overdone here. Once again, they're starting to show the same pattern as S&P 500, but S&P 500 has a lot more buying over the last few days than the triple Qs. So the triple Qs are exposed here. Now, if we have a shock in interest rate rises, so that could be a big problem for the Qs. But right now on the hourly, it is looking weak. It is trying to bounce, but it looks very, very weak. As you guys can see, the volume. So that tells us participation, pressure from the buyers is non-existent in the Qs, right? So we do need a pullback break of this trend line. I'm watching for a 305 break. If we get close above this with rising volume, I'm looking to take 311, then to 324 on the Qs. But right now, I don't see that happening anytime soon. We'll see once again. Tomorrow's Fed meeting could be a big, big catalyst for the triple Qs and as well as S&P 500. If we look at Dow Jones, the pressure is very aggressive to the downside here. And this buying volume, yes, it's more than the previous day. Positive sign. We got a big candle right here, reversal. That could be it. So got to keep an eye here. However, I would like to see Dow Jones above 328 before I do anything else. The reason for that is we can see the last time it consolidated in this area, and it ended up failing. So we need buyers to step in this area to push the Dow above. And until that happens, it's still just sit back and watch and observe and see what happens here with the Dow Jones. IWM is trying to go back up, oversell here. So we'll see how this pans out over the coming few days and weeks to see if IWM continues in this range and how much it expands to the upside or downside, right? So right now, if IWM can get above 179 or 180 with some buying pressure being built behind it, we can see a push to 184. However, if this level fails and we get more sellers that step in, we can see a reversal, but the big level on IWM is 185. That's a level to watch and see what happens if we can start a rally back to the upside. Okay. However, right now, IWM is in a range. Not a lot going on with IWM right now, other than to just sit back and watch and see what happens on this particular index. So looking at VIX here, okay, VIX is just in a range. Really, it's not really doing a lot. Okay, so it's falling, which is a positive sign. Okay, but it's consolidating in this bigger range. Okay, we need VIX to below 20 to help make sense of this market's action here. Then we can start to see maybe fear is starting to decrease, and that's I also see that the fear is starting to reduce in the market. However, participation has also reduced in the market if we look at the volume. So this is something you want to keep an eye on and see what happens with this, right? So if we look at ARK and KWeb, sorry, before we go there, we're going to look at gold. So looking at gold here, gold is bouncing here again. It's at 174. Try to get above 175. So if it gets above 175, I'll be looking for a bullish move. But like I said, market moves in waves. So this was a down move. Now it's trying to bounce, and it may need to come back and retest 172 here before it can continue to move higher. This is too much of a one-sided move on gold. There could be a pullback, but now the pullback will be the biggest thing to watch and to see where the pullback stops. If it stops here higher, but we need buyers to step in to push gold back up. So we can start to see the market came down quite a bit and gold increased. So maybe this is showing us right now that some money is starting to flow back into gold as a hedge. However, the volume on gold is still not the greatest. It's not like this right here, right? So up here on gold, so we'll keep an eye on this just to see what happens. KWeb, so China, KWeb is breaking down again. Try to break, like I said, right? This is an important pattern for KWeb. Either it's going to break from here, go to the upside, or it's going to break down. So right now, KWeb looks like it's going to break down below 23, try to fill the gap and go to 22. But we'll be watching for a 23 break to see if that happens, and we have a quick downside play on KWeb. ARK back in this range here, so I'm not trading ARK for a while. I'm just gonna watch and see what it does. But I think we can easily go to 34. This is very oversold for ARK. So, but we'll keep an eye on it just to see what this fund does. Okay. So overall, the market, guys, is very bearish. Let's look at the sectors here. XLU, okay, this is a defensive sector. XLU is rising, so is XLE, right? So you got two defensive sectors on the rise, right? Oil and gas a little bit down, commodities just barely down, basic materials is down a little bit, and then we have XLP, consumer staples rising here, which is a positive sign. So a little bit just to kind of like keep an eye. Once again, consumer staples is also a defensive stock or defensive sector. Okay, so keep an eye on that. So the overall sectors are defensive that are rising today. So the growth stocks and tech may be in trouble, that whole sector. So keep an eye on that. Wait for the Fed meeting tomorrow, and I'll see you guys tomorrow after the Fed meeting.